Hello dear viewers, Assalamu alaikum. Today we'll discuss audit and assurance subject, and I have divided our discussion into 4 parts. That is ethical consideration, Anti-Money Laundering Act 2002 prevailing in Bangladesh, ISA 300 to 450, Hallmark group case that happened in the past in 2012-13, and review of Hallmark case in accordance with ISA we have already discussed. First part, ethical consideration, Anti-Money Laundering Act 2002. This is anti-money laundering means illegal transfer of movable or immovable property directly or indirectly through or from Bangladesh. That is money laundering. For money laundering, the punishment is minimum 6 years imprisonment and maximum is 7 years. Professional accountant should be aware of money laundering as they are working in the professional or service or practicing field. This is one of the most important matter for them to disclose to the regulatory authority is money laundering is found or investigated or seen by them. Secondly, ISA 300. ISA 300 is planning and audit is important. And 315, identifying and assessing risks of material misstatement through understanding the entity and environment. This is a big standard. This is a big standard. 320, maturity in planning and performance. 330, auditor's response to assess risks of material misstatement. 402, audit consideration relating to an entity using a service organization. 450, evaluation of material misstatement identified during the audit. 300, there is a matter, the audit plan. Audit plans is related and is under strategy. Audit strategy, two term, important term, audit strategy and audit plan. Strategy is characteristic of engagements, ascertainment of reporting activities, professional judgment, nature, time, extent of resource. Understanding the entity before accepting engagement or client. This is audit strategy. When auditor go for detailed work or join in the engagement, this will be audit plan. This is team setting, engagement partner or staff setting, HR, everything is audit plan. It is further process, nature, timing and extent of further audit procedure, test of control, substandard procedure, all are audit plan. This is under strategy. 315, identifying and assessing risks of material misstatement through understanding the entity and its environment. This is important thing, matter for auditor to identify risks using the knowledge of its client, its environment or its its entity's total environment. How risk assessment procedure is done. Risk assessment procedure under 315 is entity and its environment, risks of material misstatement in financial statement, materiality, we'll discuss later in 320 ISA. appropriateness of accounting policy and advocacy, going concern, sufficient audit evidence, assumption and written representation, operating effectiveness of control, risks of error and fraud. 240, this is one of the most important. 240 ISA. Review external sources information, making engagement from expert or legal counsel, internal control or internal audit function, analytical procedure. If is it a smaller entity, considering the risks of smaller entity, that another ISA is going to be set. Not yet. I have already discussed earlier. Observation and inspection, prior periods information, susceptibility of entities, financial statement through fraud or error. Industry and regulatory factor, internal control components. This is our discussion on 315. 320 is materiality. Materiality is an omission or in disclosure of material item in the financial statement. Whether any omission of material items would affect the economic decision of the users of financial statement, that is called materiality. Materiality is set by the auditor through his understanding or risk analysis before accepting the engagement. There is another term, performance materiality. Performance materiality is certain materiality under whole of the audit materiality. Materiality in planning. Materiality should be based on three kind of criteria. That is, one of the profit before tax, secondly revenue, total assets. These should be under the judgment of materiality. Profit before tax will consider 5% at least profit before tax for setting materiality, performance materiality. Revenue 1% setting materiality. Total asset 1 to 2% of total assets. This is the criteria according to ISA for setting performance materiality. So we have to consider profit before tax 5% at least, 1% for revenue, and 1 to 2% of total assets. That is ISA, quantified by ISA. This may vary according to our client environment, its accountability and transparency all over, its regulatory requirement to be fulfilled. That's whether it is regular or irregular in compliance in all other laws, in financial statement, taxation, VAT, everywhere. So materiality may be changed or may be changed according to auditor's professional judgment. 320. 330 is response to assessed risks. How would the auditor will respond to the assessed risks? 330. It's in assertion level or and financial statement level. Two things. In assertion level, test of control and substantive procedure. Nature, time and extent will be set by the auditor. It may be a computer assisted audit technique, consideration of materiality and time also. In financial statement level, auditor will set engagement tip with professional skepticism that I already discussed, assign more skilled staff according to his client, more supervision, additional elements of unpredictability. If there is susceptibility to material statement, misstatement, or any unpredictability of events, he will consider risks and elements, additional elements. He will consider additional elements. That is 330. So there is another another 402. Audit considers relating to if the client uses third party or service organization to prepare any financial statement or part of any financial, that is using service organization. Service organization may be audited. Their financial statement may be audited by the another auditor. That is user entity, and there is two type of audit report, type 1 or type 2. If their user auditor consider type 1, that is control, and if type 2 report is control mechanism, type 1 report is somewhat risk free, and type 2 audit is somewhat risky for the auditor, main auditor or user auditor. And 450 is evaluation of material misstatement identified during the audit. Auditor will communicate all the material misstatement found or identified during his audit. They will inform the management or communicate to those charged with governance. That's our ISA discussion. Now we'll discuss Hallmark Group case. Hallmark Group was established in 2007 in garment sector in Sawar, Dhaka, Bangladesh. They used to take loan, huge amount of loan from Sonali Bank, Ruposhi Bangla branch, Dhaka. We are using this name or this case or scenario for our learning, not for commenting on court's judgment or anyone's punishment. We just learning our case scenario. In 2011, in 2008, it formed a lot of companies and bought a lot of that is 100-acre land in Sawar. They intentionally made fraudulent transaction of loan. That is, they took funded loan, that is in cash, and non-funded loan against Indian bill purchase, IBP, in banking. IBP means local LC. Against local LC, they used to give guarantee and uses the loan taken by them. That's all. But Sonali Bank was not aware of the converting the short-term loan into long-term loan. Inland bill purchased LC was for short-term loan, that against export they will make the payment to the bank, but they converted into long-term loan and bought huge assets, land in the name of the Hallmark Group. they made another fraudulent activity, that's MD and Sonali Bank's chief maybe. They formed 5 companies as supplier to Hallmark Fashion or group. The companies, the 5 companies formed to get the payment out of the Sonali Bank fund. The chairman and Sonali Bank official formed the companies to make the payment of supply. Sonali Bank, Hallmark Group was in the asset and liability was the supplier. Sonali Bank made the payment to suppliers which were actually fake or fraudulent. There is no existence of the companies. The companies received the payment from Sonali Bank fund. That's in accordance with 240 auditor's responsibility regarding fraud and error in financial statement. What we have learned from the Sonali Bank case, that is, I want to discuss that auditor is supposed to find out any fraud and error in material misstatement, but in this case, in general compliance, test of control and substantive procedure, there was no scope for the auditor to find out huge fraud, especially the perpetration was made by the high official of Sonali Bank and Hallmark Group chairman. Internal control was to be set up by the higher management or those charged with governance, but charged with governance were intentionally engaged in fraud. So there is no scope for the auditor to find the fraud in that case. Internal auditor were responsible and they should have information or indication to find out such fraudulent activities. But internal auditor and Bangladesh Bank Authority failed to detect such misstatement. And branch capability to issue loan was exceeded higher than 500%. That should be judged by the board of the Sonali Bank, Bangladesh Bank high official and internal audit. External auditor was not the auditor of Hallmark Group. They went to audit for Sonali Bank. Sonali Bank have many thousand branches. In this thousand of figures or statement or information, auditor is not able to find out such fraud. That's perpetration according to ISA 2440 made by the high officials of Sonali Bank and Hallmark Group chairman. That's our discussion for today. That's ethical grounds of ethical consideration Anti-Money Laundering Act 2002 and ISA 300-450, Sonali Bank, Hallmark Group and Sonali Bank fraud case. That's our scenario analysis and our review. That's all, audit professional students. I'll meet you later with our next series of ISA. Till then, thank you. Bye. Assalamu alaikum.